Greetings, members one and all of the Salivation Nation. Well, according to the World Bank, we're not going to see gold and silver do much for the rest of the year. We may have seen their best days. As this article comes to us courtesy of Kitco News, and is talking about the perspective from the World Bank, and that's going to cause quite a stir in the community. Well, what about the World Bank? Does it matter what they think and the like? It's a global bank and the like, but there could be some truth to it, and it might be good news. Let's take a look here. The gold market may have put in its best performance of the year as the first quarter came to an end, and investors looking for higher silver prices might be disappointed this year, according to the latest report from the World Bank. In its semi-annual report released last month, the International Bank of Four Banks said its precious metals price index saw a 4% increase in the first quarter, following marginal growth in the first quarter of 2017. The gains in the first 3 months of the year were due to a 4% rally in gold and a 6% rally in platinum prices. The analysts noted that the two metals were pushed higher because of expectations of rising inflation, growing geopolitical tensions, and a weaker U.S. dollar. Silver prices were only slightly higher in the first quarter of 2018 compared to its gains during the same period last year. Silver prices edged higher on declining mine production, and despite relatively weak investment demand compared to the other metals, the World Bank said. Looking ahead, the analysts said they expect silver prices to struggle through the rest of the year. The comments come as silver price remain trapped in a narrow trading range. July silver futures last traded at $16.59 an ounce, down 2.6% since the start of the year. Silver prices are forecast to ease slightly on moderating industrial demand, the report said. More than half of silver consumption goes to industrial use. Demand from photovoltaic and electronic sensors remains strong, but it's being eroded by substitution and more efficient production techniques that use less silver. And you remember we talked about that in the article that I went through about how California's mandate for solar in homes will have an effect, or could have an effect, with silver prices, but we're seeing that substitution and more efficient techniques that use less silver. Turning to gold, the World Bank said it is only forecasting a 3% gain for the yellow metal in 2018, which indicates the market doesn't have much upside from current prices. Gold prices also remain stuck in the middle of its trading range. June gold futures last traded at $1,319.10 an ounce, up 1% since the start of the year. It's actually down a little bit today, $5 at $13.12. It seems to be stuck in that range, between $13.50 and $13.00. We haven't really seen much movement, really, many different ways, upside or downside. The upside risks to forecast include deepening geopolitical tensions, delays in central bank rate increases, and a weaker than expected dollar. Downside risks include stronger economic growth, rising equity markets, a stronger dollar, and an easing in geopolitical tensions, the analyst said. So a lot of different things can happen there, but those risks, probably from one way or another, may not have as much impact. But that could be a good thing, depending on how large those risks are. Obviously, if Russia completely invades Ukraine or some other former satellite state, that's going to have some huge effect. If there is, a tightening of the oil supply from OPEC, then that's going to have some effect, even though the United States is becoming more and more independent, and other things like that, geopolitical tensions. If somehow the economy, the stock market falls, multiple days of over 300 points to 500 points each day, I think that may be the real worry. I believe that even though a lot of the economic indicators and a lot of the policies that have come out of the White House have helped the economy, I still believe, and I believed for a long time, that our quantitative easing and our massive spending will one day come back to bite us in one form or another. Uh, Although it may not be in the form of a Great Depression or a Great Recession, we are overdue for a recession of some sort, but there may be other factors and things that come into play with this that could cause a real strain on the economy in one way or another. And I do believe that in time, soon, whether it be within 5 years or 10 years, we will see a reset of some form or another of the financial and the currency systems around the world, at least here in the U.S. with the dollar. What form that will take is anyone's guess. It may be something that's relatively seamless of a transition, but watch how gold and silver are affected in that manner. I believe that's where you'll probably see some real massive revaluation if that does occur. Because I do believe that all the gold and silver that is out there, especially gold holding by central banks, they want it to literally be worth a lot more. Its true value realized. And right now, the dollar's declining value each year, even though it's strong. If you look at inflation of average of 2% per year, it's, the dollar's losing value every year. And so you want to have a strong dollar and a consistent and a stable currency. And at the rate we're going now, even with so-called quantitative tightening, I think it's still in trouble. It's going to take a miracle, literally, to bring it back, in my view, from the brink. And we'll see what other nations do in the long term. But nonetheless, that's why we stack gold and silver, because it protects us. From situations like these and instability. It's the ultimate insurance and the ultimate savings. So post your thoughts below. I'd like to extend the multitude of gratitude to y'all for watching and encourage you to please rate, comment, and subscribe.